Just when I thought the bias couldn't get any worse, the media comes back with their typical BS, this time raising expectations completely on their own and spreading the narrative that anything short of a record quarter for Tesla in terms of deliveries is going to be a major disappointment that will damage the stock and lead to a weaker second half of the year. So in today's video, I think we have some more biased media to expose. Let's get started. What's up everyone, my name is Ale and welcome back to my world of stocks. If you don't mind, please consider taking just a quick second to hit the like button and help offset all those angry Tesla short sellers that I'm sure are going to leave their troll comments like they always do when I talk about Tesla. But just a few months ago, the media and all the Tesla short sellers were saying that Tesla has all kinds of demand problems because they had lower deliveries in the first quarter versus their record fourth quarter. Not because of seasonality, which we all know the automobile industry is one of the most seasonal markets in the world. Not because of logistical issues, which we all know that the first quarter was the first time they were shipping the Model 3 to both Europe and China. Not because they only delivered half of the quarter's numbers 10 days before the end of the quarter, and certainly not because of a tax subsidy cut that led to higher deliveries in the previous quarter. No. It was because of demand problems. Because what kind of a crazy person wants to buy an electric Tesla that spends $0 on marketing on all of the big media platforms when you can buy gas vehicles that help drive up huge ad spending to their platforms? Not to mention that short sellers literally have billions of dollars on the line doing everything they can to destroy the company at all costs. Now keep in mind that back in the fourth quarter we saw record deliveries at 91,000, and then because of a number of factors those deliveries declined drastically to just 63,000 in Q1 of this year, which the media and Tesla short sellers used as ammunition to claim that nobody wants to buy a Tesla anymore. And now that we're finishing up the second quarter, I'm watching these videos from CNBC and the commentators who I wouldn't really consider anything more than just short-term traders with a clear bias, but one of the guys literally says that Wall Street wants them to hit 93.9 thousand deliveries in the second quarter, which nobody on the show bothers to question or correct him, and they go on to explain how Tesla not hitting that number will translate to a weak second half of the year, but we'll fact check that estimate in a second because they don't give a single source for that number. I'm then watching another video from CNBC and the headline reads, Tesla reports estimated 74,100 Model 3 deliveries in the second quarter. Well, guess what? I can't find anywhere that Tesla reported that. So why would CNBC say this? Well, if you watch the video, they don't give any sources and they just say that it's a target that Tesla needs to hit for the stock to go up, which by the way, it's another record-breaking number, or it would be another record-breaking number that is much higher than anything that they've done in the past and would therefore obviously not be a very easy target to hit. And then a little further in the video, they say that a number of analysts are turning bearish on the stock for the second half, and they cite a UBS analyst who apparently doesn't care if they hit record deliveries because deliveries will later soften in the second half of the year, which will lead to increased losses for the company. So he lowered his price target all the way down to $160 a share, which again is regardless of whether or not they actually hit Wall Street estimates, which again, according to CNBC, would be a record-breaking 93.9 thousand deliveries. And as if that wasn't good enough, the lady ends the video by saying, not such a good first half for Tesla. And then the video just cuts off. And we'll get to that too in a second. But first, I just want to mention that the analyst that they were sourcing in the video is known for giving Tesla 18 sell recommendations in the past 2 years, only up until September of last year, by the way, so it's probably gone up a lot more since then. But during the past 7 years, they gave GM a buy rating 35 times, having never given Tesla a single buy rating or GM a single sell rating. And if that wasn't bad enough, it's also noted here that at least at that time, UBS did hold over 300,000 call options,
valued at over $100 million, but they also held over 1.3 million put options valued at over $446 million, so easily 4 times more put options, meaning that they were betting hundreds of millions of dollars that the stock would go down.
But hey, no bias at all, right? Just good old-fashioned honest reporting. Anyway, let's go back to what they said about Tesla having to hit a record-breaking 93.9 thousand deliveries just to meet Wall Street expectations. So if we throw CNBC's target up on the chart, which I'm going to call it CNBC's target because I'll show you later that it's not really Wall Street. But anyway, CNBC's target up on the chart, we can see that it would equate to a quarter-over-quarter increase of 49% and a year-over-year increase of over 130%. That means that in the last 5 quarters, Tesla has increased deliveries year-over-year by 65%, 219%, 203%, 110%, and if CNBC's own projections are true, 131% respectively. These are the numbers that the media claims to represent weak demand and a bad year so far. I mean, it's just hilarious. Keep in mind that in the past 4 quarters, the Model 3 was the best-selling car by revenue in the United States in every single quarter, even beating out Toyotas and Hondas. And it even outsold all of its actual competitors combined. But again, no demand and a bad year so far. But regardless of all of that, was CNBC even telling the truth about those estimates being Wall Street estimates at around 93.9 thousand? Well, for starters, we know that a leaked email from last month had Musk saying that they had a good chance of exceeding their record deliveries from the 4th quarter, and then during the shareholder meeting earlier this month, he reiterated that they have a good shot at breaking those delivery records, but if not, it's going to be very close. So basically he said that it'll be somewhere around 90 to 91,000 deliveries, which was their last record quarter. And while they may break that record, there is still a chance that they don't actually hit it. Okay, well, CNBC said that around 94,000 is what Wall Street is expecting, but the problem is that I googled the SHIT out of this and I could not find a single source that said 93.9 thousand deliveries. I couldn't find it anywhere. And the only one that I could find was actually CNBC. And most of the sites that I found that actually gave any kind of estimate on what Tesla's deliveries will be in the 2nd quarter were much lower than that. And we're going to look at them in a second. But also keep in mind that just a couple months ago, all these media sites, all the analysts, they were all projecting 60,000 deliveries, 70,000 deliveries. Because remember, around that time, everybody was screaming, no demand, no demand. Nobody wants to buy a Tesla. So they were like, well, maybe it'll be a slightly better quarter than Q1, but it's not going to be anything great. And then all of a sudden, Musk starts talking about a record quarter, and all of a sudden, all these analysts are raising all of their targets. And now CNBC wants to play it off like it's 93.9 thousand, like that's what Wall Street is expecting. But that's actually not what I found at all. Here's a report from Benzinga that cites Wedbush analysts estimating only 84,000 deliveries. They have another article here where they cite a former hedge fund manager who predicts a big miss in Q2 at a little over 80,000 deliveries. And the International Business Times reports that Tesla will miss Q2 delivery targets, citing that a number of analysts expect Tesla's Q2 deliveries to be between 89.5 to 92,000. And even the Motley Fool, who are Tesla shareholders and bulls themselves, they actually recommend the stock, they also predict the same range as that group of analysts. So even at the highest ranges of the only real consensus of analysts that I could find on the internet giving any kind of estimate for Q2 is still at just 92,000 at the high end versus the 93.9 thousand that CNBC cited without giving a single source. And even if we take the lowest of that range, which would be 89.5 thousand, which is not record breaking, and I'm sure CNBC would use that and run with it to claim that they greatly missed targets, but even that would still put them at a year-over-year growth rate of 120%. So it's definitely not a demand problem or weak demand or anything of the sort. Now, besides all of that, there's been a couple of update reports from a media site that I actually do trust a little bit. It's called electric.com, and they may be biased to the opposite side because they are obviously kind of a Tesla bulls. I mean, it's an electric kind of a vehicle website. But at this point, with all the lies that I keep running into from the mass media and Tesla short sellers, I'm just honestly willing to trust Tesla bulls a little bit more. But anyway, looking at some of the reports here, they claim that Tesla is doing everything they can to reach a record quarter. One report claims that they're offering bonuses to sales and delivery employees if their delivery goals are reached for the last month of the quarter, and apparently it would be $1,200 for every sales employee and $550 for every delivery employee, and that gets doubled if they reach 36,000 deliveries for June just in North America alone, which many think would get them to a record quarter. That may seem like out of reach numbers, but another report shows that some of these efforts have been paying off already, citing that they are delivering as many as 1,000 deliveries per day just in North America alone. Now, an even newer report than that claims that they have 7,300 deliveries planned for the next 7 days, which would be close to the end of the quarter based on when that report came out, and that would mean over 1,000 deliveries a day for the first time in Tesla history. But they also have sources claiming that employees are doubtful that they can hit a new record for the quarter, given that it would take an incredible amount of deliveries in the last 3 days of the quarter. So here's a perfect example of unbiased reporting, giving both sides of the story and saying that, look, Tesla employees themselves don't even think that they can hit the record numbers. So that's much less biased than what I see everywhere else. Still, it's important to note that this is all based on North America alone, and the record quarter is based on global estimates. So if there's any kind of surprise overseas, then they could potentially still report a record quarter. But again, Tesla employees are pretty much saying, hey, look, we're probably not going to be hitting a record quarter. In other words, we really have no idea what's going to happen when they announce deliveries for the second quarter. But the media is already kind of trying to get ahead of it and take, all sides pretty much. So basically saying, hey, if you don't hit record numbers, which by the way, they kind of just pull that number out of a hat. I don't even know where that number came from. If you guys know where any of these numbers came from, feel free to let me know in the comment section. I'm more than willing to educate myself and be proven wrong on anything. So feel free to let me know. But to me, it sounds like CNBC just kind of pulled this number out of nowhere, 93.9 thousand, and basically saying, hey, if you don't hit that target, which is a very high target to begin with, if you don't hit it, then it's a huge disappointment. And even if they do hit it, they're already pulling out the second half of the year card. They're already saying, well, that's fine if they have record numbers, but demand's going to be weaker in the second half, deliveries are going to be weaker, and there's going to be increased losses. So isn't it funny how all these biased people just make these predictions, and if they happen to be wrong, well, then they can just push them out further and further. It's like they kick the rock down the road further and further. It kind of reminds me of all the short-term kind of trading fortune tellers that always predict a recession and a market crash, and whenever there's a correction and there's a buying opportunity, they always say, no, don't buy stocks, it's going to get worse and worse and worse. And for the past decade, they've been saying this year's the recession, and when it doesn't happen, oh, next year's recession, and doesn't happen, oh, the next year's recession, doesn't happen, oh, next year. They always just kind of keep pushing it forward. And don't get me wrong, I am someone who actually thinks that we are overdue for a market crash, and there are a lot of serious concerns, debt levels, and all kinds of things that could lead us into a recession at any time. But my point is that we just have no idea when. Yet all these kind of fortune tellers always make these predictions, and when they turn out to be wrong, they just kind of push them ahead. And it kind of reminds me of similarly of what's going on with Tesla. But as a long-term investor, again, I've been very open about this. I still see Tesla as a speculative stock. So for me, it's a long-term spec stock that I'll continue to hold for the long term because I think the risk reward is worth it. But at the same time, I acknowledge that they have some fundamental issues, and that obviously has to do with the balance sheet and of course not having sustained profitability. But at the same time, I do think that the media and analysts and short sellers are pretty unfair with the company in terms of their expectations, because they always say that Tesla has to be producing record deliveries, growing by hundreds of percent, disrupting one of the biggest industries in the world, and still be sustainably profitable at, pretty much the early stages of their company and their business, which I think is ridiculous. It's going to take time, and all these people are just kind of, in my opinion, I don't mean to be insulting people, but in my opinion, they're all just kind of short-term traders, and they don't have patience, and they lack a certain sense of long-term vision. And so for that reason, it's very easy for them to attack Tesla when it's going through some short-term struggles, at least what is, in my opinion, some short-term struggles. But anyway, that's just my thoughts on everything. Let me know what you guys think in the comment section below, and should be interesting to watch. I think that they'll be announcing deliveries like within this next week. So we should have delivery numbers very soon. If you guys want me to do an update when they release delivery numbers, make sure you let me know either with a comment or just by hitting the like button. It'll tell me that you guys want to see more videos on it. But I think that just about does it for this video. Thank you so much for watching. I'll catch you guys in the next one. Take care. Bye-bye.